This morning's second panel discussion is Shedding Light on Shadow Banking in China. This session will be moderated by Dr. William Overholt, President of the Fung Global Institute, and will be joined by his panelists, Mr. Clark Anderson, Dr. Fred Hu, and Professor Liu Mingkang. So if the distinguished panelists could please make your way to the stage.
Well, welcome. I'm fortunate to have a very distinguished panel here. Fred Hu, Dr. Fred Hu, has 1 degree from Yale, 1 from Tsinghua, and 2 from Harvard. He was an economist with Goldman Sachs and then chairman of Goldman Sachs for Greater China. He now has his own company, Primavera Capital, so he can root us in the realities of what's going on. Liu Mingkang has been president of Bank of China. He was the first chairman of the China Banking Regulatory Commission. To me, he's the hero of Chinese banking reform, and he's the hero of honesty in Chinese banking reform. Truly somebody who stands above, well above the norm, and even among the top officials. Clark Anderson started as a country risk analyst at Bankers Trust. He became the chief country risk analyst and portfolio analyst for Goldman Sachs. He did so well that he retired for a while. And now he's gone back as chief country risk analyst at Morgan Stanley. So we have world authorities here. Now, shadow banking seems like a pretty esoteric topic. What is shadow banking? It's any kind of provision of credit that's outside the normally regulated banking system. I like to think of it like water running down a hill. Some of Chinese thought associates money with water. It's very appropriate. If you have water running down a hill and you put up some dams, eventually the water finds a way to run around the dams. Similarly, if you have a huge amount of money looking for customers, looking for return, and you put up some dams called regulations, let's say banks should put most of their money in state enterprises, and banks shouldn't charge more than a certain amount of interest. And you have this huge amount of money, trillions of renminbi, searching for other customers who will pay more. And you have millions of smaller enterprises desperate for funds who are willing to pay a lot to get the funds they need. And that money is going to flow around the dams, the regulations, and it's going to do a lot of good because those other firms really need money. And it's going to create some risks because it's not regulated and nobody knows what's really happening. In China, shadow banking has suddenly in a few years become very big. So what we want to explore today is what are the benefits, what are the risks, what's the scale? So let me start with Chairman Liu and ask him to enlighten us about how he sees shadow banking.
Okay, I think Bill, you have already got a very clear picture about the shadow banking. Shadow banking is the guys, you plant the trees, and the whole shed, he sits, you never. So I think because the good news for China is that people realize the shortcomings of shadow banking. So with spiraling up of the amount the shadow banking is doing, the government is taking measures. And the not so good news is that there's still a lot to do. And we got to quicken the pace. Otherwise, you could see the spillover, the risks among the traditional banks, because the most important things we can envisage in the future is still the interconnectedness between the shadow banking institutions and the traditional banks, I'm sorry to say. So by the end of the day, it could cause a huge stir in terms of social unrest. Is that okay? But in general, with the good news, I think the risks in general could be controllable in China.
Fred, would you like to elaborate on some of the benefits you see as a practitioner from shadow banking and some of the risks you see?
First of all, thank you, Bill. I'm delighted to join my old friends here at this seminar hosted by Fung Global Institute and the University of Hong Kong. Shadow banking. I think enough has been said and written about the risks, dangers, and the evils. I actually want to take a different tack. I just think shadow banking has a very valuable social economic functions in modern financial system. Let's take the specifics of China, shadow banking. First, I think it's a natural byproduct of financial sector development, financial deepening, and diversification. China is a very high saving country. 45%, or even at the peak, 48% of GDP are saved in the form of household savings, corporate savings, and the government savings. But Chinese savers, for a long time, are so constrained how they could invest their savings. Bank deposits, in the last decade or so, real estate, very few options. And given interest rates control, we have very severe financial reparation. In other words, the yield on what you save are so meager. You couldn't really have old age security. You could not have protection of health against health risk. You couldn't even really send your kids to university, graduate school, or study abroad. So households, first of all, Chinese consumers, the ordinary man on the street, want to find investable products which promise high yield than regulated bank deposit interest rate, right? So that's a very powerful motive, and I think it's legitimate. No one should be in a position to condemn it. That's why in China, the bulk of shadow banking is in the form of wealth management product, okay, and interest loans. Actually, Chairman Liu, when he was the chairman of CBRC, I think he was very liberal, open-minded, to allow non-banking financing to take shape, obviously in a prudent way, precisely to give the Chinese consumers more choices, number one. Number two, even though China today boasts one of the world's largest financial systems, measured by financial assets, in RMB or in US dollar, very, very large system. But our system is very good at serving corporate sector at the expense of household sector, and very good at serving state-owned companies at the expense of private companies, very good at serving the interest of larger corporations at the expense of SME, small and medium-sized enterprises. For us to make the transition to a more domestic demand, consumer-centric, innovative economy, we need to overcome the hurdle of SME financing, consumer financing. But our main banking system is not well equipped to do that. That's why that gives rise to a wide array of so-called shadow banking activities. Okay? Without shadow banking, I would say SMEs in China would suffer even more, and the Chinese consumers would suffer even more. And then it will be very, very difficult to make the transition to a consumer-centric economy, more sustainable new economic growth model. So all this, I want to say, all you guys probably have read a lot about the dangerous risks of shadow banking. I just want to, at the outset, for those who disagree, we can have a very good exchange. But I was up front, I really want to highlight, I think it's been lost amid all this heated debate on shadow banking, that this essential, important, positive social economic functions have been forgotten. Finally, I would also say, whoever invented this name or term shadow banking, I think should be shot. I'm not a native speaker of English, okay? But even I could appreciate, use the name shadow, always kind of predetermined moral value judgment, thinking it must be unhealthy, illegal, unethical, dangerous, and all that, right? Shadowy, I think it's totally wrong name, But then I read, actually, this is first coined by chief economist of Pinko. Actually, I met him, but I think he did a terrible disservice by using this term. Let's just say non-banking lending activities. How's that? I think it's a much more scientific, much more accurate name.
Thank you, Fred. That's very important. New research has shown that the Chinese economy is now driven mainly by private firms. New growth, new employment come mainly from smaller private firms. And if those firms don't have money, they're not going to be able to drive the economy. Let me go back to Chairman Liu. The shadow banking sector has emerged very rapidly in recent years. Why such fast growth in just a few recent years? And is the speed, is the resulting scale a concern? Is the speed of growth a concern?
Shadow banking was with us in the past and still is today, and it will be with us in the future, and everywhere. But I don't worry about the pace of the growth of shadow banking. Shadow banking, as Dr. Hu said, actually plays a role of complementary. to the traditional bank services. But the problem is that we must have a fully fledged points of view. On the one hand, you can see that the reasons why these years we can see sharp growing of the shadow banking activities. The shadow banking activities actually is a quick response to the problems of traditional banking industries. And because what happened in the traditional banking areas, the worldwide, and China included, including China, is that nowadays, after transformations and of almost all the banks in China, and but on the flip side of a coin, if you think about the governance issue, the credit culture of the traditional banks still will have a lot of problems, because it's KPI-led incentives packages, but how many people have thought about, is that reasonable for the KPIs? It's ROA, ROE, and searching for yield, and so on and so forth. So, by and by, the people in the corner of the dealing room and in the credit room, they will seek for the yields and seek for the quick bucks. And the wealth management products or other products produced and offered by the shadow banking or other derivatives on credit market produced by the shadow banking institutions are very lucrative and bringing very high yield and fee-based income to the traditional banks. So they gain with each other and changing for that. If you look at the shadow banking, the strong point of the shadow banking is that the complementary roles, because they bridge the gap for the real demand from the real economy, some SMEs, private sector demand. But most of the money channeled to the shadow banking institutions went to the local government platforms. They went to the real estate businesses. And they went to the overcapacity industries, big and small. They are not credit worthy. They are the borrowers. The banks want to quit, but they are shy enough to say that. So they said, okay, judged by the duration, you need 5-year loans. I only give you 1. Maybe I will roll over that and give you a new one if you can repay me. The way out is that I can introduce you a good friend who is the shadow banking. They can help you to bridge that. Then I give the guarantee in an implicit way to the shadow guys, saying that no need for KYC, okay? Okay, you don't need to do the due diligence because I implicitly guaranteed you, and then we can share the fee income and so on and so forth. So this is the major fact. So that is something we want to be guarded against. And on the flip side of a coin, why the traditional banks do not love the small private sector entrepreneurs who enjoy creditworthiness? There are several reasons. Because, we have a lot of big guys, SOEs over there. And it's very costly to do the due diligence and towards the SMEs. Second, regulatory pressure. We have unintended consequences. coming from the new Basel framework and so on and so forth, automatically people will check the thoughts from the bankers saying that why I should loan so long, 5 years, because the capital will be based on the risk weighted according to the terms of the duration. So we shorten the loan period. I only give you 1 year. So I can save a lot of capital. Right? And also the third pressure is coming from, as I mentioned, it's a very misleading KPIs. So that's the reason we witness so many scandals the world over. We have LIBOR scandals. We have Forex scandals. We have scandals there, scandals there, here. Scandals, scandals. We have so many regulators and supervisors. They're not functional. The reason why, they're absolutely wrong. The root cause is the governance, is the credit culture. The governance issue is the incentive issue. So that's the reason. The shadow banking is at large and working with traditional banks. Talking about shortcomings is that China has the largest credit bureau. China do have credit bureau, and it is the largest worldwide. But due to the shadow banking activities, the credit bureau doesn't work because you couldn't get a whole picture of the borrower. And the second, shadow banking institutions, by and large, they use leverages at ease. Okay? The leverage will be embedded in their products layers and tiers. Nobody will check that. So this is the spillover effect. And third one is transparency issue. If you want to sell some products to your credit, this is the base, the must. This is the must, the transparency, okay? You must make sure the buyer and the investor understand the story, thoroughly. But quite often, they sell you something, and you buy something just like going to casino, okay? So this is good. But the story behind that is a lot of risks. So this is something we got to be alert enough. And we can use the shadow banking because a certain portion of money are really doing a complementary role, the fight against the legacies of traditional banks, and help the SMEs for their real need in their economic activities. But using shadow banking is buy time. Buy time for what? A subtle reform of the traditional banking industries and the subtle changes and reform on regulatory side. If you buy that time for nothing, only just for movement, not real action, then that could be very risky and very dangerous. So we got to see the both sides of the coin. That's my point of view. Thank you.
So I think we've established several points. The big banks don't like to lend to small companies. It takes a lot. It takes about the same amount of work to lend to a small company as it does to a big company. The big company has implicit government guarantees if it's a state enterprise, so why not lend just to them? I would add one other thing. Most of the small companies have 3 or 4 sets of books. So if you're a bank, you may have a very good credit analysis system. But if the numbers being put into your credit analysis system are pure fiction, then that's a problem. So shadow banks fill a big gap. Some of them may be close to the local institutions and know the credit, know the family, so they can do credit-worthy lending. Chairman Liu has identified a key source of risk, which is the connection between the shadow banks and the regular banks. The regular banks, if they lend for 5 years, have to conserve a lot of capital against those loans. If they lend for 1 or 2 years, it doesn't take so much capital. So you lend for 1 or 2 and then give some money to a shadow bank and say, help them pay back the loan, and after a month we'll make another loan. And the shadow bank, meanwhile, remits some of the profits back to the main. That creates a connection between the shadow banking system and the regular banking system that can be very dangerous if things start to go bad. So we've identified both the benefits through what Dr. Hu and Chairman Liu have said, and a critical source of risk for the system, which is the connection between the gaming done by the big banks and what the shadow banks are doing. Clark, you're an expert on risk. You look at the risks of all the countries in the world. When you look at China and you see shadow banking and problems of local government finance and a property bubble and a lot of industries with overcapacity, do you see a lot of risk here? Is that risk particularly connected with shadow banking?
Well, I think it's this is a useful exercise to look at shadow banking in China and China generally through the lens of country risk, which I think is something that is unfamiliar to most of you. Country risk I define as the probability that an event in or affecting a country will harm my bank. And that's it. And if you think about that, that encompasses a huge range of potential dangers for my bank: political, economic, social, regulatory, legal, on and on and on. And we take that very broad mandate very seriously because, frankly, most of the risks that any institution takes by doing business in another country have nothing to do with whether that country defaults on its debt or not. Most of the risks are from all kinds of other sources. So in order to do this, what do we do? I mean, what tool can we bring to bear to look at China and the shadow banking system? And my joke is that, you know, we have to take something incredibly complex like China and condense it into the elevator speech. And the elevator speech is, I get on the elevator with my boss, and he says, "So Clark, tell me about China." And I have 30 floors, right? So let's do that. Let's think about the tools we can use. And I think the most appropriate one relevant to shadow banking is to think about how we assess the success of a country. And I want to give you 2 ideas here that I think are especially appropriate: prosperity and balance. We want to know how prosperous the country is and how balanced it is politically and economically. Now, if we look at shadow banking in China, and we use those two criteria in particular, what do we come up with? Prosperity. Unquestionably, shadow banking increases prosperity in China. And I totally agree with Fred, even though I am a professional risk manager and I'm not supposed to say that. But I totally agree. It's a great thing, and every economy has shadow banking or informal banking of some kind. It creates jobs, facilitates capital, etc. So let's look at balance. And here, of course, we begin to encounter some problems. And I think in the balance sense, shadow banking creates risks in China in a couple of ways. One is, with all due respect to Chairman Liu, I have been quite concerned about the rapid pace of increase. The fastest rates of shadow banking credit growth in the world in 2012 and 2013 were China, and do you know what other country? Argentina. Now, Argentina is in default. It's completely blocked from international capital markets. Banks won't lend money. So of course they're going to have a rapid growth in the informal sector. But that's not very good company for China to keep. So something's going on here. There's some imbalance. And I think the big risk that I would see in this balance question is that shadow banking, because it's less regulated, less formalized, less transparent, it also operates at the margins of the system, both in terms of credit, the amount of credit, and credit worthiness. And we've already heard some very good comments on that. And so a rapid increase in shadow banking activity will in aggregate, reduce the credit worthiness in the system and increase credit in the wrong kinds of ways. And we could talk about that. There's some other imbalances, I think, that this points to.
I also started out in the country risk business, and in the big American banks, the standard was if banking assets are increasing more than 20% a year, it's unmanageable, and the bank is likely to get into trouble. The assets of the Chinese banking system as a whole have been increasing considerably rapidly, more rapidly than that. So that doesn't answer the question of risk, but it's a flag. Fred, would you like to add to this?
Yeah, I had a passionate defense of shadow banking, but I don't want to give you a wrong impression. Think I'm just very rosy, everything's fine, and I'm not worried about the risks accumulated in the Chinese financial system or the economy broadly. Of course, I am painfully aware of the financial imbalances and the stresses and the potential dangers. Really, shadow banking, again, if we had a seminar like this, say 6-7 years ago, discussing China, I assure you there was no word of shadow banking, okay? Because it didn't exist in China. There was no shadow banking. It's really last 4 or 5 years, again, in the aftermath of global financial crisis, Chinese government unveiled one of the largest stimulus programs recorded in history anywhere, in the form of fiscal stimulus, in the form of financial monetary stimulus, and that actually created the momentum, impetus for the rise of shadow banking. Of course, I've been watching this development with amazement. First of all, actually was encouraged, even in the midst of global financial crisis, the Chinese leaders, particularly reformers like Chairman Liu and central bank, still were willing to continue the course of liberalization. Instead of clamp down, shut down everything, but actually created the freedom opportunity for non-banking financing activities to happen, non-banking or shadow banking, whatever you like to call. So that's encouraging. But I also been concerned to look at the extraordinary pace of credit expansion since 2008. Okay, domestic credit expanded on average almost 30% per annum. And the history has shown in any economy, any financial system, if there's been a period of excessive credit expansion, the inevitable result is deterioration of credit quality, accumulation of non-performing loans, and even a potential financial blow up. In 2008, total credit outstanding as a percent of Chinese GDP, about 140%. So China was one of the more moderately leveraged economy in the world, very moderate. Within 4 years, this ratio doubled. So China now has one of the world's highest leverage ratios, 280% of GDP. Actually, to put in perspective, so China now is much more in debt than US, Germany, Australia, and Canada. Okay, so this has actually, I think, is concerning. Okay, I don't think 280% of GDP is the end of the world, but it has approached or even reached the limit of the debt capacity in China. That's one potential systemic, macro-prudential concern I have. The second, I think, as Chairman Lu and also Clark mentioned, with this kind of torrid growth of credit, whether it's banks or non-banks, okay, shadow banking or not, is concerning because that means some of the lending took place in a reckless way without enough due diligence, sound credit analysis. The borrowers, could not service a loan. Certainly in many of the Chinese local governments, they just so extended themselves. Many of the property developers and some of the traditional manufacturers, okay? So, and in the case of non-banking finance, and again, which is synonymous to shadow banking, if you prefer to call shadow banking, additional risk is the opaqueness. There's not enough transparency, not enough disclosure, and I'm sure pretty pervasive mis-selling. A bank would sell to the customer a so-called wealth management product, promising yield at 8%, which is a multiple of the bank deposits. But then the customers were told, or actually got the impression, these products are just as safe as bank deposits. The world doesn't work that way. So that's why there's been defaults of some of the WMP, some of the trust loan schemes. I think there will be consumers, consumers or investors will end up in tears. There will be defaults. So I think, in addition to above potential systemic impact, there's a real consumer protection, investor protection in China, because financial institutions, whether it's banks or non-banks like trust companies, they have not provided all kind of adequate disclosure for their customers in terms of the embedded riskiness of many of these products. So that's also a concern I have.
Thank you. So we've established shadow banking is one of the reasons for the Chinese economy's success. These small and medium enterprises that are the core of Chinese growth and Chinese new jobs today are fed by this shadow banking. At the same time, there are real risks, particularly when connected with the local government debt risks and property bubble risks and overcapacity risks. But let's move on. Chairman Lu, one of the most fascinating aspects of shadow banking is the rapid growth of digital finance. Some people are arguing that digital finance can be much more efficient, especially dealing with smaller enterprises, than standard banking finance. Some people think it'll disintermediate the whole regular banking system eventually. And China seems to be moving faster than almost all the rest of the world. I know you're a specialist on this. Can you tell us about this exciting sector?
Digitized financing, we call the P2P lending, for example, is different thing. And we can see the strong force of the digitization in the modern financing is that, A, they are focused on SMEs. 80% of the money are going to the qualified borrower and who are private sector SMEs. And the B is 20% going to the retail. It's to boost the consumptions on the real basis. It's a small amount. The only loan basic, small, and basic, small, and diversified. So this is the common practice, which makes sense. And also the P2P lending is booming in China because they are focused upon the attachment of the e-commerce. So what they are doing is that they must check the story about the supply chain, okay? So the real story is coming from the supply chain. So they support every layers and tiers in the supply chain, from the lower reaches and from the upper reaches. And they pick up the successes among those who are doing the good jobs in the retail businesses and small businesses. I haven't heard any story they touched the government platform. I haven't heard any story they are having some connectivities with the real estate businesses, properties, to support developers and doing something like that. And I haven't seen any P2P lenders are so silly in not to judge, the creditworthiness of their borrowers, and that they are collect some informations, reasonable or not. That is their way of thinking, their way of doing the, the vetting. Okay, so I think it's a huge challenges once again upon the traditional banking. They must reshape themselves and transform themselves to serve the customers better. Don't serve your pocket better. You must serve your customer better. We said this is the basic ruling in today's colorful world. Customer is always the king. This is a slogan for several hundred years. But I'm so doubtful why people indeed, they never follow that. Customer is actually the king. Your service is queen. Put them together. You can create a kingdom, right? So that is something we got to pursue. For a lot of successful P2P lenders, I talked to them. I witnessed their non-performance loans is rising as well, in line with the basic practice of Chinese concrete story, because the speed is slowing down and the cost is rising. And so it's quite reasonable to see in 2 years, they're very short, the track record is very short, but the achievement is marvelous and impressive. But within 2 years, the non-performance loans rose sharply to 1%, some 1.6%. But so what? It's a huge flow of credible, the players and the borrowers. The money are flowing in. They can use that flow to cover the risks. Well covered. So I think that is something very new. And in China, coming back to the shadow banking institutions, the reason why I said I do not like any Puma at large, but anyway, the risks of shadow banking industry in China is controllable. Why I say that? Because they are not very international. So the risk won't be spillover in globally. And the second is that, you know, the shadow banking is cooling down. The reason why? Because the government realized the dangers of the local government platform. So they took the measures to shrink and give a very rigid discipline for the local borrowing. And in the meantime, the MOF people, Ministry of Finance, took the measures that to bring all this debt, or partially or gradually, under the spotlight and the sunlight by issuing the debenture and the bonds in the capital markets to redeem their shadow borrowings with the shadow banking. So with all these tools in the toolkit, still we have a lot of, I don't think the risk will be, you know, will be spillover very sharply. So coming back to the point, still two things are absent in China. We got to quicken our pace and take the real actions. One is credit cultural nourishment. We got to cultivate the credit culture, whoever you are, private sector or public sector, SOE, no discriminations. So long as you are able to repay me principal plus interest in due time, then I can loan you, okay? Otherwise, no. The banks got to learn to say no, okay? That's a credit culture. I got to loan the money, and I got to make sure that the money will be coming back, because the money is others' money, it's not yours, okay? And you got to take care of that. And the secondly, I think, is the transparency. We badly need the transparency. Information disclosure, transparency must be with us, even with P2P players, with digitization players. We must remember transparency is the key to success, because still you are doing the financing, you know, even with the mobile banking and so on and so forth, transparency and the credit culture are the key to their success as well.
Thank you. Fred, you're both an economist and a practitioner. The Chinese economy is evolving into a new growth model, from state enterprises to small and medium enterprises, from exports to domestic consumption, from manufacturing to services. And you're operating right at the rock face. Do you see the financial system evolving in a way that, particularly through shadow banking, that's facilitating this transition? Is it moving in the most helpful ways? Is it moving fast enough?
The transition to a new growth model is imperative, but it's also difficult and time-consuming. You know, I think we have seen some really very promising signs of the kind of nascent changes taking place in the Chinese economy. In part, really the financial sector developments. We already talk about the internet financing. I think it's a very exciting, very promising development, because China, we have the world's largest internet user population, and most of this actually is mobile internet. You know, with the spread of smartphones and 4G LTE network. So, as we discussed earlier, even though our financial system is very large, but we do a poor job in serving SME, in serving consumer. So that has been service drag, for our new growth engine. So with the advent of internet financing, P2P is only part of it. I particularly highlight the mobile payment platform, such as Alipay, which doesn't, it's not a P2P, but it's extremely powerful new technology to enable transaction between individuals and B2C and B2B. So that dramatically cut the transaction cost, dramatically increase the efficiency, make the wheels of commerce just spin much, much faster. I think that's a tremendous boost to whether it's consumption or SME activities across the landscape. Over the last few years, we have also seen very vibrant venture capital, private equity industry in China. Going back a decade ago, if we had any so-called new tech, high-tech companies, the chances are they were all 100% funded by overseas capital, by international VC and PE firms, because there was no domestic indigenous VC or PE shops. Over the last 10 years, particularly the last 5 years, we have seen many of the local PE VC firms mushroom across the country. Now we have probably hundreds of different firms. So there's no accident. If you go to Zhongguancun in Beijing, or go to Shenzhen or Hangzhou, see this enthusiasm for startups. Many young, college graduates or even just college students now, have some business idea, and in the past they would never, get anywhere because there was no financing available. Now this hurdle has been significantly overcome. Okay, so there's more availability of venture capital and private equity. In fact, outside the United States, which is still the world's epicenter of venture financing and innovation, I think China is the next big economy that there is now vibrant startup and venture capital scene. That makes me extremely encouraged, because the main transition, I would say, for our economic model is from a low-end, labor-intensive manufacturing, export-related manufacturing, towards more consumer service, but at the end of the day, it's more innovative, using the technology to transform, economy to raise productivity. In the same way, Korea and Taiwan did in the early 80s when mainland China opened up, their low-cost export-related manufacturing competitive advantage disappeared overnight because they couldn't compete with mainland China in terms of low-cost manufacturing. So Korea and Taiwan had no choice but to move up value-added ladder. And both Korea and Taiwan have largely succeeded, in this transformation. I think where China is today, right now, is where precisely Korea and Taiwan were 25 years ago. And I think China holds the same promise of succeeding, because all the key factors underpinning South Korean Taiwan success in building high-tech industry, like the human capital, the number of scientists, engineers, exist in mainland China on a larger scale. We have 2 million graduates in science and engineering. It's the largest pool of engineering graduates. And we even have some advantage South Korea and Taiwan didn't have, is the size of our domestic market. So if we have TSMC in mainland China, we don't have to rely on exports. Or if we have Samsung, like say Xiaomi or Huawei or Lenovo, again, we don't have to rely on exports. It's nice to sell to India or Vietnam, but the domestic market is big enough to support homegrown, successful technology companies. So all this, I think, is, I feel very, very, very optimistic that, with our concerns on shadow banking, local government debt, real estate slump, and of course, equity market bubble, a lot of risks going on. But if we take a medium long-term view, I do feel China stands a very good chance to make the transition to a new growth trajectory, which is more sustainable, and we'll be able to also overcome the trap of middle income, to make it to a high-income developed society.
What Fred has just said has an analytic component about all the exciting things going on. I think it also has a message to the younger people in our audience here. There are so many entrepreneurial opportunities. The changes are so fast that somebody with good education and a lot of energy and enthusiasm has just an infinite number of opportunities out there. In Hong Kong, this has been a big issue. What are young graduates going to do? The lesson here is watch what Fred said, look at his career. There are huge opportunities there. But they may be heavily on the mainland. They may involve a lot of financial innovation. Chairman Liu, we've talked a lot about shadow banking and the exciting innovations that are going on and the risks. I wonder if we could step back and try to paint a picture of where China's financial system is going. It's been a big bank-dominated system. All of a sudden, interesting things are happening in shadow banking. Capital markets are starting to become more dynamic. The leadership has said that the core goal is a better allocation of resources, and financial institutions are the allocators of resources. Are we headed toward a very different kind of financial system with a different shape in the next decade?
I think talking about the future of the financial industry in China, I think I'm quite confident because we have a blueprint and a big roadmap. It's already very clear and available since the third plan. The only remaining issue is implementation. And according to the reform roadmap, I think the most important thing in Chinese financial industry is liberalization. Liberalization of interest rate, liberalization of exchange rate, and also gradually we will have a full free flow and convertibility of the renminbi. And those liberalizations bring us a lot of benefits and challenges, and it's heavy pressures towards the financial industry players, who he is a traditional banker or shadow player or the internet mobile financing. things, and so on and so forth. But the pressure is that because the realistic speaking, you got to learn how to manage your balance sheet, the liability and asset side. It's a dynamic work because it's not just like apples, in the trees, because you got to cultivate and everything's daily, even hourly. So it's a changing world. It's a heavy pressure. So all the Chinese bankers, I found they're eager to learn and still on the learning curve, a very initiative stage, but facing the liberalizations, I think it will bring the new blood and the fresh, because people want to take the talents from Hong Kong and from every corner of the world, because they need the knowledge, skills, and experiences to do that. And the second thing is cultivation and supervision, effective cultivation and supervision, because all the financial players need to be cultivated properly. And what is about the social responsibility, what about the corporate governance issue, and how to do the due diligence, especially in China, how to enhance credit control, and how to enhance the transparency. Transparency is not an easy taskmaster. It's very costly, especially when we have so many silos in China. So I think this is the big challenges, but it's good for China in long run. We got to seize the moment and take actions forward. So, and the last but not least is that we got to keep the door open. And the opening up policy is very effective because it's traced back to the inland, the reform and the restructuring of everything. You learn the best things in line with international best practices, and also you learn the lessons from the outside, like a global financial crisis, the root causes of that, and you think about, you recheck your thoughts. What about the Chinese root causes? It's not only the overcapacities, it's not only about, something legacy systems, but very effectively, you got to think about the institutional arrangement. You got to draw a boundary, because it's a large country, very complicated country, but we have to draw a boundary. But within the boundary, you must have the right incentives and right motivation to motivate the people to do the right things. And that all of this must be based upon institutional arrangement, not from administrative orders and measures. That's the broad vision. I think it's already very clear in the third planner and the fourth planner. Fourth planner is focused on rule of law. The remaining job for us is implementation. So Hong Kong, you can help us a lot, mainland a lot, and in the future, we think we will close the ties from the Asian Global Institute with Hong Kong U by doing a lot of assignments and homework for helping China, helping mainland, and helping Hong Kong as well.
Thank you, Chairman Liu. We have a few minutes for questions. If you have questions about shadow banking, or if you have questions about the earlier issue on renminbi internationalization, this panel can address any of those issues. Sir. Please give your name and your affiliation. And
yes, well, thank you. My name is Andrew Leung. I'm a China strategist. Well, thank you for this very interesting panel. As has been pointed out, the problems of shadow banking are twofold. One is, of course, the reform of the financial system. And the other, particularly the interest rate, so-called financial repression, feeding into the lack of higher yield products, leading to shadow banking. The other one is, of course, is the local government ability to raise the necessary funds to finance the kind of infrastructure and social needs without recourse to shadow banking. So my question is addressed to Chairman Liu, as to what extent would the central government be able to reform the ability of the local government in raising the necessary financial resources to meet the kind of burden for infrastructural development and social demands with a rapidly urbanizing China? Thank you.
China is a big country and it varies from province to province. So I think the right policy is that the central government will classify the creditworthiness of every provinces and measure them by a certain benchmark. And then the MOF will give, Ministry of Finance will talk with each government and how much you can borrow the money and from which form. And so I think that is the way. But the root causes of the things is that we still got to keep the distance between the local government and the local SOEs, okay? And you must check out the necessity of the existence of local SOEs. And also you must keep the distance between the government, everywhere else in the hierarchy and with their counterparties of the SOEs. And also in China, in long run, I think we got to have a clear-cut, broad vision saying that how we can deal with the large projects in terms of project financing. Still we need 30 years loans for a hydraulic power plant or nuclear power plant. And second is how we can support the trade in terms of supply chain financing. And you must use the bank obligation payment system instead of letter of credits and so on and so forth. And thirdly is inclusive banking. That means rural areas and SMEs and retail consumption area, individual needs, and so on and so forth. Though the sum is very small, but you must bear this ability and awareness to do that from home, and you got to have a well-designed blueprint in China. So these are three areas we got to think about in addition to the government financing. So I think the Chinese government is fully aware of it's a legacy issue for the local government needs in funding, and they were thinking about further how we can streamline and better our taxation system, not only in the financial system. Taxation system is very burdensome, and a lot of controversies about the VATs or business tax or income tax and so on and so forth. And if we can streamline and improve that according to the roadmap of the third plan, taxation reform is very, very significant for China in the future. Otherwise, you will deter every investor at home and abroad.
Thank you. I had a comment and a question for Clark. So my comment is just that both this panel and the previous panel have provided fantastic educational material. I've learned a lot this morning. I'm sure a lot of other people in the room have as well. So just to really reiterate my thanks to both panels, it's been fantastic. My question to Clark is, I like the risk analysis of prosperity and balance. Of the 30-floor elevator ride, what proportion of your time would be optimism and what proportion would be pessimism?
I would say it's probably 70% optimism and 30% pessimism. I'm in the business of having to assign probabilities, so I'll throw it out there. I'm also on record as saying there's 1% chance Greece will exit from the Eurozone, so you can take that as you will. I have always been optimistic about China, and I'm also one of those people who very proudly says, I believe in Chinese exceptionalism, in the sense that China has a unique system and a unique ability to create a system that suits itself, and to try to apply outside perspectives and lessons and theories to China on a blanket basis just doesn't work. And so in looking at these problems, shadow banking, internationalization of the renminbi, et cetera, if you start putting the pieces together, as Chairman Liu and Fred have done so eloquently, you realize that there is a plan, it's working very well, and that it's different from what anyone else would do. And so that's the basis of my optimism over time. And I think that we as a firm are optimistic in the same sense as well. I think this is going to open up, the financial liberalization that's happening now is going to open up, you know, a bonanza of all kinds of interesting opportunities for global firms in whatever sector you want to mention, not to mention benefit China enormously. So yes, there are certainly risks, but I would say Fred and I are probably about on the same level. I mean, it's just very hard to see how China's not going to get through this tricky period in pretty good shape. And I see Professor Aliber there, and I will venture to say I disagree with him a little. I think China's prosperous years and strong growth years are not over. I think they will come back, and I think there's a huge opportunity here to increase the productivity, very low productivity across most sectors in China, to really see a strong growth rate over even decades to come.
We have time for one last question, if it's quick.
My name is Ben Mock from DBS Bank. Just one quick question is, given the China capital account opening and interest rate liberalization, how do you see the impact, right, after the capital account opening? How do you see the impact to the bank interest rate vis-a-vis the return for the wealth management product? How do you see that happen in the next, in the horizon of like 5 years, something like that? So maybe a quick question to Professor Liu, and also other speaker can comment as well. Thanks.
I think it's a gradualist approach for the opening up, especially talking about capital account free flow. And so it's very hard, or it's very early to measure the outcomes, negative and the positive. But in long run, I think China is a big country, judged by international trade volume and the investment is a due track, investment flow and so on and so forth. So I think in general, the liberalization of the foreign exchange rate and capital account free flow will be benefit for China in long run, because this will increase your in-home reform and the restructuring, and also it will strengthen the ties between China and the rest of the world. And you must make sure that it's a matching scheme in terms of capital and trade and investment and so on and so forth. So I think in general, I'm cautiously optimistic about outcomes and the pressures upon the domestic financial institutions and so on and so forth, brought by the free flow and the capital account. Fred?
So that brings us to the end. The Fung Global Institute is trying to bring the world's best minds to you and to exchange with you, and very proud to be on the way to becoming part of the university and distributing that dialogue further. So please join me in thanking the panelists.